Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over options data. And so here, this is the weekly highly regarded options theses, and this is week 10. And so I do have a link to this spreadsheet if you guys do want to access it. And yeah, so I will include a link to that in the description of the video. The full link, you can't see it there, but you can see it up here. But yeah, I'll put it in the description. And yeah, so I'm just going to go over these list of contracts that I typically do. Before I get into the details here, I did want to just mention the new ones that I added and one that will be going away. Let's see. So one that I added is this Mara $50 contract call that expires a year from now. And so the reason why I wanted to add that is because we're in a new year. So, good to, be looking forward to the future. And also because this contract that I'm currently holding, it's just a few months from expiration. That gets me a little anxious. So I thought I'd look into one where there's a lot more time before it expires, and I'll go over why I feel like a $50 strike is a good one for this time frame versus $35 for March. I also added another NEO call. This is the $15 call that again expires in January of 2026. And, I just realized that maybe I'm a little too early with these NEO calls or maybe I'm wrong. So I thought it'd be good to just look at some other contracts that might be good to add to. And I also will go over why I think 15 or actually 16 is a reasonable target for that one. I've also added the $5 call for plug, again expiring in January of 2026. And yeah, so I basically, wanted to go over that one because I am saying goodbye to this $3 call that expires in June. And the reason for that is because I'm no longer holding it, and rather than starting, to get more of that contract back. It's just a little bit riskier with it only being 6 months away now for that expiration. I thought I'd look at the one that expires, a year from now. And then if I do scroll down here, you can also see that I added this other Unity software call. This is a $65 call that again expires in January of 2026. And I will give a breakdown of why I think 65 is a good price target. But really, I think 75 is a good price target. Maybe not by this date, but I do think that there is a lot of upside potential for Unity. So that is why I added that one, because I don't know that this contract's going to come back to my average because, I am holding it now. And so, I'd like to add. But if it doesn't pull back to my average, this contract is, fairly cheap since it's such a high strike. So, I thought I'd look into that one. But then just going over the details over here. So this is, the weekly options video that I do every Saturday. And this is to just serve as a trading journal for myself, a documentation of these contracts that I am swinging. Some of them I'm just looking at out of curiosity, but most of them I do hold. But for the most part, I just hold one or two contracts. I haven't gone really heavy into any of them, but there are a couple that I am. And also should note that this video is for educational purposes only, just for fun. And I should also note that none of this is financial advice. Like I said, it's just my personal trading journal. As, some, if not most of these trades will be bad, as I am learning, how to swing options. And yeah, so just take that with a grain of salt. All of these contracts that I'm going over, I am a novice at this, but so far, I've been able to make money with all of the contracts that I've sold, but some of them I hold, and, they could go to zero because most, if not all of the contracts will go to zero, as that is the nature of options, which are very, very risky. So do, consider that. And any of the levels, any of the prices, whatever that I talk about in this video, plans change, the market changes every single day, every minute of every single day. News comes out and, a thesis could be negated. So do consider that. If some news comes out, maybe one of these would be a bad move, or maybe all of them. As you can see, all of them are calls. Maybe I'm wrong, and maybe I should be going short some of these buying puts. But I've just got calls here. And I should also note, too, that this spreadsheet that I'm going over that I put online, I populate it with data from unusual whales, but I do that manually, so there could be some typos. So do consider that. And also, I'm not sure if it's still going on, but Unusual Whales did have like a Christmas sale. It might have ended yesterday on the 3rd, but maybe it's going until the 8th of January. I'm not sure. But yeah, I have an annual subscription to Unusual Whales. And so I'm just enjoying learning more about it. And if you're interested in Unusual Whales, what I found was helpful for me is I just got used to the free free tools that they have available online. And I got used to those tools, using them, understanding how to use them. And I just took data from that, put it into the spreadsheets here. And then after doing that for about a month, just getting, the hands-on experience with the data, I decided to pay for the annual subscription. And prior to using the free tools, I did do 2 or 3 months subscription, and I was just kind of overwhelmed by the data. So I do think it's good to first get used to the free tools that they do have. And then also I do have this note on timestamps. So any of the tickers over here, there are going to be timestamps to them. But if, like, for example, you want to look at NEO, I'm not going to have a timestamp to each one of these contracts. I will just have a section for NEO. And then at the end of the video, I am going to do Grok's 10 premium picks from Friday. So that would be January 3rd, as I am recording this on the 4th. And so, yeah, with all of that being so, I got to go over my thesis table here. And so what this is just kind of like my rule of thumb for, how I'm trading these contracts. The number one thing is to not fall in love with any of these contracts, any of these stocks, to not get, emotional about them, to not get jealous of others making money, to not FOMO in. This is just about, retail, and that being myself, trying to navigate options. And if other people are making trades, they're doing great. I don't want to be chasing anything, no FOMOing, nothing like that. And also to kind of stick to this plan, which I am fudging a little bit as I get more familiar with contracts, but just as I'm learning, this has been really helpful. And so this means, to not get greedy. And so my plan with these contracts is that, I initially get one, and then I have a plan to sell that at an 80% profit. If I pick up another contract, if it does dip a little bit lower, or, I do decide to get two, then I would trim, one contract at 20% profit and then the other at 80. If I accumulate 3, the third one I would sell at 100% profit. And then from there, I kind of go backwards. If I have 4 contracts, I trim at 10%. 5 contracts, I trim at break even, just to lower that risk. And then if I get more than 5 contracts, then I plan to trim in 100% increments following, getting up to 2x, then, 3x, 4x, whatnot, and so on, up to a 10-bagger. And so that hasn't happened yet, but hopefully someday it will. And then this one thing that I do have here, this little stop sign, that is because something that I had realized over the past 10 weeks is that it is good when a contract does go green for me if it gets up to 80, but maybe not 100%, and then maybe it starts to pull back. Good to have a stop loss at 20%. So then if it does come down that low, I at least secure some profits. And if it then does dip back below 0, below my average, after I would cut the losses, 20% gain at 20% up here, then, I could buy back, at that price. And so, because I have held some of these contracts where they went up to about 80% or nearly 80%, and then they came back down, and now I'm in the red with them. And, you know, I got plenty of time before they expire, so not a big deal, but I think that would have been a good thing for me to have done, and I have actually done that for a few of these contracts more recently, and it has served me well. But anyways, let's get on to the contracts over here. And so the first one is going to be AMC. This is the $8 call that expires in June on the 20th. And so looking at this contract, you know, this is one of them that went up a lot higher. In blue is the average price of the premium for each trading day. And so that blue line went up pretty high, notably higher than my red average. And, you know, I didn't have a stop loss at 20%. And so it has dipped a little bit below my average. It ended, you know, just 1 penny, or at least the average that I have listed up there is 1 penny below my position average, which is 53 cents. And, you know, I have to say this might be disappointing to some of you who are fans of AMC. You know, I was rubbed the wrong way by the dilution that happened over here. And I feel like I wouldn't have been so much had I just been holding shares. But since I was holding this contract, you know, you can see that it, you know, bounced from my average and was going up higher. You know, I could have been taking some nice profits there. So, you know, my average around 53 cents, it went up to, let's see, a high of over 90 cents. So that's, you know, an 80% move to the upside. You know, as you can see, I did take some profits at 80%, trimming the position. But then when there was that dilution, not only did the stock price come down, the premium on this contract really came down. And yeah, so I just have, you know, in all honesty, a lot less confidence in AMC, at least as far as these call contracts go, especially with this being now less than 6 months away. And so this is one that I plan on exiting at, you know, just over break even at 54 cents, so a penny above my average. I think I have 2 or 3 contracts right now. I'm not exactly sure. But yeah, I mean, I just want to, you know, get out of this one. I do think that the stock price could be going up to $8 a share before June. But I felt like we were breaking out above $5 here, and we got dilution. We got, you know, rugged a little bit. You know, it's good for the company, but as far as being a share and or contract holder, you know, I wasn't too happy about that. And so if we are to dilute at $5 a share, you know, maybe we dilute at $8 a share. And so with this being less than 6 months away now, I'm a little antsy about that. And so I am looking to exit this one. And the reason why I would add or reestablish a position, or perhaps in the other contract that I'm looking at, is that if the stock price came down to $3.69, did just put out a video yesterday about AMC. I feel like it could be coming down to around $3.50. And so if it comes down to $3.69, then I'd consider adding contracts to, or more, to buy more of these contracts. But, you know, as of right now, I'm, in all honesty, just looking to exit this one. So, you know, it's kind of unfortunate, but, you know, I just feel that it's just not looking so great. Even though, you know, I think it could be running. Like I said, you know, I'm just a little concerned because of that dilution. But some things, you know, before I skip over to the chart, that we can see here is that open interest has been going up. But, you know, as we had this big spike in volume, that was actually a lot of selling here. But generally, open interest has been going up. More people are holding this contract, so that is good. And then over here, we can see that the total premium, the spike here, that was about $60,000. So, you know, not really that much money. You know, I'd like to see stuff, you know, $250,000, you know, in the millions to be really getting excited. So yeah, I'm a little bit concerned about this one. If we just flip over to the chart, you know, I did just do a video on this, so I don't really feel the need to elaborate, but I just feel like it looks pretty weak here, just consolidating along this downtrend. And, you know, like I said, I think it could be coming down to 369, maybe 350. And so rather than accumulating those contracts as it bleeds, I'm just going to, offload them just a little bit above break even, and then think about reestablishing a position when it's lower. And then so now I'm going to flip over to the unusual whales data, and this is just showing the volume traded each day over the past, let's see, 30 days. And then over here we can see that the total net put premium in red and the net call premium in green, with the yellow being the stock price. And this is just for one day. And so what we can see is that, as price traded flat over the course of the day, closed at the same price that it closed on Thursday. But what we can see is that net call premium was going up over the course of the day, whereas net put premium was going down and actually going negative. And if we look at the volume, we can see that it was, net increases in those calls. So looking good there. But that's, of course, just, one day. Excuse me. So, I could adjust this to look at more data, but I just can't make these videos too long. So I'm just going to limit to that. And then here, we can see that the premium has been coming down. This spike here was the day before we got the news of the dilution, and then it's just kind of come down since then. So that was, fairly disappointing. But if we do look at this largest volume candle over here, that represents a candle premium of about $16,000. So while it might seem like a lot of money, it's really, in the world of, these contracts and stuff and looking for an unusual whale, 16,000 isn't that much. So, but that could also just be because this is maybe less sexy of a contract because it expires in June rather than, pretty soon, or, being a leap expiring in January, which is the next contract that I'll look at. But I'm just going to switch over to, let's see, the spreadsheet here to go over the AMC $20 call that expires January 16th of 2026. So a little over a year from now. And so, I feel like if I am to be long AMC, I already got some shares. And, I just don't think that I need to be risking a contract that expires so soon in June if there's a possibility of dilution and things like that. And so I would rather go with a contract that expires in a year from now. $20 strike might seem a little crazy, but I did go over that in yesterday's video, why I think AMC could be going up towards $20 a share. So, this seems pretty reasonable to me. And so rather than accumulating the other contract, I'd rather, just offload that one, and then I could feel more comfortable about going along with this contract. And so what we can see is, nothing really too exciting. Stock price in the premium in that's the stock price in green, the premium in blue, came down, then came back up, got news of dilution, and then both came down. And so, really following that dilution, or actually, no, I guess I had a contract over here at 35 cents. I ended up selling it for, let's see, 80% profit, so about 28 bucks. And then I reestablished the position but higher, and I should have been more patient and waited to get it lower. It was at 35 cents before, and the price did come down to 35 cents and actually hitting some prices lower than 35 cents. So, I could have been more patient, had my average even lower, but currently my average is around 43 cents. Looks like I'm holding 3 of these contracts with plans to trim at 10, at 20, and 100% since I already trimmed at 80. But I don't plan to add to this one until, again, price comes down to $3.69. But what we can see with this one that's perhaps a little bit more encouraging than the other AMC contract is this big spike in volume in blue here that actually corresponds with this total premium of over $800,000. And while it might not seem like, the open interest went up following that, you just have to consider the y-axis here. It's 105,000 up to 108. So it's a pretty tight range there. And if we do look at the spike in volume, that does correspond with an increase in open interest that did fade and actually, did go lower than it was previously, but now it's notably higher. So I think that's good. And then, if I just flip over to the chart again, just to take a step back, Again, I went over this in yesterday's AMC video, and yeah, I just see this gap here right around $20 a share, 1960, and so I feel like that could be a pretty nice target for AMC over the course of the year, and so I think that this contract will end up, be going up in value, given that I have, over 12 months before this expires. So I feel pretty good about that. And if I look over at the data in unusual whales at that contract, so the $28 call that expires January 16th of 2026, over 1 year before it expires. And so what we can see with this, this is just the same AMC general data that I just went over for all contracts. And what we can see here in the daily volume candle over the past 30 days, which you can see up here, what we see is that, really around December 5th, just after December 5th, we saw this big drop in premium. That's because of the dilution. We have seen some increases in volume following that, and it does look like we have had some increases in the amount of open interest, 107,000 contracts, but it's kind of been flat. There's been some buying and selling, so, nothing to be going on about. But now, I'm just going to switch over to the next contract, which is going to be the BlackBerry ticker symbol BB $5 call that expires in June on the 20th. And so looking at this one, it does look like I have a buy order just to pick up one more contract at 30 cents, which was the low on Friday. And so I did not have that limit order placed, or I don't think I had that limit order placed on Friday. So, that was not filled. And, hopefully it will be. And actually on Thursday, so on the 2nd, I did sell one contract at 46 cents. Looks like it was a 20% gain equal to $8. So, again, nothing too crazy there, but this is just me getting more comfortable with swinging these contracts. And so my average currently is 38 cents. And so I do plan to swing that for a 2x, but it would be nice to pick up another contract if it does dip. And so what we can see over here is the stock price has gone up and it's kind of consolidated a little bit. Might be a bull flag. And with that, we've seen the average of that premium, the contract premium, going up and then consolidating. And I have, swung this contract a little bit up here. I took a less than 10% profit, or actually, greater than 10% profit, because I recognized, hey, it might be pulling back, and it did. So that was a nice, risk management there. And then we have seen these spikes in volume, which look like they correspond with this one being, 50,000. So not that huge, but this one over here was just about 350,000. So that's pretty notable. And following these spikes in the total premium traded on the day, we have seen the open interest going up. So that does suggest that, these big volume days, so volume in blue here, those big volume days, they have been net buying. So I do think that looks good. And then let's see, I'm actually just going to flip over to the other contract that I'm considering, which does look like I also have a buy for it at 40 cents. And so before I get into the details down here, this is the BlackBerry $7 call that expires January 16th of 2026. This is, again, going out more than a year from now. And, I don't have this one. I first wanted to establish a small position in the one that expires sooner, just to kind of gauge it a little bit. But, I do think that this would be a safe bet, $7 over the course of the year to swing, not to hold for a year, but, to swing for, 80% profit or whatever. And let's see. So this one, similar to the other BlackBerry call, is that we have, the stock price going up, consolidating, same with the premium. And then over here, we have seen, spikes in volume that correspond with about $90,000. So not super huge. That could just be because the share price or the strike price is $7. So, it's a pretty cheap strike, also a pretty cheap stock. So that could be why, not so much money in that spike in volume, or not that much money or total premium behind the spike in volume. But what we have seen with these spikes in volume is an increase in that open interest, so that does look pretty good. But yeah, so let's look over at the chart. Why do I think a year from now it could be up at 7? Why do I think 6 months from now it could be up at 5? So if I flip over to the chart to look at BlackBerry, we can see, I've already got a level up here marked right around $5 a share. And so that looks like it's just, from this Fibonacci retracement that is, this is the 100% right here around 385, currently a little bit below that. But if we do look at the 1618, that's right around $5 a share. Also does look like we did have some consolidation around 5, so that could be some resistance. But just looking at the current price action does look like this could be a nice little bull flag, as the RSI is cooling off. We could see the next leg up maybe in the next week or so. And then why did I pick 7 for a year from now? Just going back in time to the highs from August 16th of 2022, that was at $7.20. So that's why, perhaps a year from now, BlackBerry could be, almost, effectively double its current price. So it might be nice to swing that contract. And so looking at the contracts in unusual whales, the first one is going to be that $5 call that expires in June. And what we can see, and actually before we get into the specific contracts, we can just look over at the BlackBerry data here from Friday. We can see that as the stock price came down and consolidated, we saw the net call premium spike up a little bit, then pull back, and then go higher. And then, we also saw the net put premium kind of increase, opposite of that, but then pull back some. And overall, for this volume, we did see, puts kind of dominate in the middle of the day, but at the beginning and the end of the day, we did see calls kind of dominating there. So, I think this is kind of like a mixed bag. So, not, I would say this is kind of neutral. Is how I feel, but I'm still getting used to interpreting these charts, so take that with a grain of salt. And what we have over here, it looks like this is perhaps a fairly new contract, just because there wasn't that much volume traded, or at least just wasn't very active prior to more than a month ago. Or really, just at the beginning of December, about a month from going back in time from today. But we can see these spikes in volume, but again, this highest spike was actually, this was 350,000, so this one has more premium behind it than the other contract. But we can see that, the premium's gone up, consolidated, similar to the stock price. And, talking about, the bull flag over here, potential bull flag. So we'll have to see what happens with that. And then the other BlackBerry contract is, again, this $7 call that expires a year from now. And, really not that much action prior to December. But then in December, we got some spikes. But again, only around 90,000 here. It looks like $93,190 traded on December 23rd. And so, I have that exact same data in my spreadsheet. It's just a little more dynamic, a little more fun to look at over here. And so, I feel good about this contract specifically, just, nice to have, an additional 6 months versus the other one just having less than 6 months now before it expires. If I come back to the spreadsheet here, we can see the next contract, which is going to be the Celsius, ticker symbol CELH, $50 call that expires June 20th of this year. And so this is one that I do hold, and I actually started trimming on Friday based on that table that I have. So I trimmed at break even. Sometimes when I trim at break even, I lose a little bit because of fees. Sometimes I make a little bit because of rounding, and or just whatever my average is. And so I ended up making 4 cents on it. So it's kind of pathetic, but lowering risk, managing that risk, it's important. And then I also ended up trimming at 10%, made $13 on that, so not too bad. And so you can see that too. sells here, total cost, that was at $1.27, so my average position, and then also at $1.40. And so it does look like I hold, 4 more contracts. So I do plan on trimming at 20%, 80, 100, and then once contracts get up to $3, you have to go by 5 cents. So this ends up being just a little bit lower than 200%, but I don't want to get greedy going up to 385 because maybe it doesn't hit. So, that's where I got limit sells for that. And then what we can see as the stock price and premium have come down, bounced a little bit, consolidated, come down some more. And you can see that red line where that's my position. I've been accumulating these contracts. And now, I don't plan on getting any more of these. Just plan on taking profits, as it goes higher, which I'm thinking that it will. And I actually think that, I'm probably going to be selling myself short at 20%. I think I could probably do 80, 1, 2, and 300. But I'm just following the plan, and because I could have made $13 more, but I lowered that risk because maybe it tanks. Who knows? Maybe something happens in the world, and Celsius tanks. So good to manage that. And let's see, with the spikes in volume over here, they did correspond with, maximum of about 60, plus $1,000 in premium. So, nothing too substantial there. But with these spikes, we can see fairly steady increases in that open interest. So that is good that people are accumulating this contract. And so, now I'm just going to switch over to the chart so we can look over at it. And so why did I pick $50 for my strike? Let's see, probably just because it was a little bit cheaper than other strikes, but I do have this level up here at $49.30. We got all this consolidation here, and so that's probably going to be substantial resistance. And, whether or not price gets up to $50 a share, I'm going to be trimming those contracts. And, just from, this move on Friday when it went up about 6%, a little less than 6%, I was able to make, 10% on one of those contracts that I hold. And so if it is to go up to $50, I am probably definitely selling myself short with those contracts, trimming at 20, 80, 100, and 200%. But, I am still getting familiar with contracts, so I've got to be managing that risk. And, a thing that's made me feel a little more confident about this, I was hoping that the 786 here at 2676 would be holding at support, but we did break lower. And actually, I should note, did have this alert here to just kind of remind myself, to give myself some confidence that it's potentially at support. But it did break lower to around 26, this yellow line here. And that, what's that based on? It looks like it's based on the low from November 9th of 2022. And so, that seemed to be a good level for dip buying. And, I was accumulating the contracts around this range here. And so on the 30th, let's see, did I accumulate contracts? Yeah, I got one at $1 and one at 86 cents. And I should note, if you're not familiar with contracts, $1 represents 100 shares. So it's $1 times 100. This contract right here cost $100. This one cost 86. And so I did accumulate on that dip, and it does look like I bought very close to the low. Is actually the low on the 30th, so I guess that was Monday, and then on Tuesday it hit 85 cents, so I did scoop that up, so pretty nice there. But then if we look over at the data for this contract, we can see, just looking at, before I get into the specific contract, looking at the Celsius data for all of the contracts, we can see that as stock price went up on Friday, the net call premium went up, as the net put premium went up a little bit, but then it kind of went down and then became negative. And we can see that overall the volume was, in favor of the call. So this is bullish. So that looks good. In the 30-day data, I kind of went over this in the charts that I have up there. So, really, this is the exact same kind of data over here where you got the volume, got the spikes. Let's see, I don't know if that, yeah, so this includes more data. So this second spike was on around December 9th. And so December, 9th right there. Basically the exact same data, except, this is the average premium. And so that is going to be more similar to the blue line over here, as this green line is the open interest. But anyways, I do have another Celsius contract on here that I just like to keep an eye on. It just gives me a little bit of confidence. And this is the $40 call that expires in July of this year. So just giving it an extra month. And so the thing that I really like about this one, you might be able to tell, is this big spike in volume. And the candle premium for that day, which was December 12th, is over $18 million. So that makes me feel really good about it. Also that it was bought at this high. And actually, yeah, this is something I need to do. I need to, let's see, that premium, that average fill, 497. So what I should do, looking at the data over here, I feel like 497, I could, well, this is just being a little bit cautious. What I might do is do that. No, I'm going to leave it. I need to follow the rule. But, I do feel like I can feel rest assured that the premium will be getting up to 380 because somebody put $18 million with an average fill of 479. So the premium will probably get to about $1 more than this, which translates to $100 more. So yeah, I may want to adjust that. And so I'm just going to note it here. I'm not going to adjust the spreadsheet, so you guys won't be seeing that if you're looking at it online. But I need to adjust one of these, because I gotta break the rules a little bit. Unless I get tight for, needing some cash on the side, then I can trim this. But if $18 million are going long, actually, that's a different contract. I'm a jerk. That's a different contract. So, yeah, I shouldn't mess with that because this here is an average fill 479. That was on the 12th. If I look at the contract that I hold, 479. The average premium for this day, this was, let's see. That spike was on the 12th, 479. If I look at the other contract, find the 12th, the average fill was 246. So yeah, I'd be getting greedy. That's a bad idea. So it's good to think, before making some crazy decisions. It was a different contract. But yeah, I feel like this one will be going up higher, because it's supported by a different contract that, I guess has a more conservative strike, $40 versus my 50, also giving it, an extra month. But if we do look at the data following the 12th, so December 12th is when that big spike was, just scrolling down here, we can see that December 12th, 38,000 contracts traded, represented by, $18 million in premium. And we can see that of those 38,000 contracts, virtually all of them were buying. None of them were selling because the open interest increased by just under 38,000 contracts. So 18 million going long on Celsius on this day. And so if we look at 38,000, we can see that, the open interest has maintained, even though the premium has come down. So they're betting on the premium going higher. They're just going to be waiting until July. But yeah, so let's see. Let's come back to the spreadsheet, and I'll go over the next one, which is ChargePoint. And so this is one I do hold some shares of ChargePoint, but I did, pick up this ChargePoint. That's the ticker symbol CHPT, $2.50 call that expires in May. And, I think there wasn't a June contract at the time, so that's why I got May. But this one, it's just, there's not enough data, there's not enough money behind it because it's just, a much cheaper stock trading around $1. And so I want to get out of this position. My average is 11 cents. I'm not sure how many contracts I hold. Looks like about 6 because I got 2 on this day. So I want to get out at effectively what's a 10%. I'm not going to adjust it because I don't want to deal with the formatting and stuff. This is actually a little bit less than 10% at 12 cents. But yeah, I just want to get out of it because, I'm basically risking like $60 on this, and I think that could be put elsewhere. And just on contracts that have a little bit more data. But I would like to, while it's hanging out around 7 and 8 cents, I've had this order here for 7 cents. It was not filled on Monday. Don't know why. Just because there's no volume. Nobody's trading it. So volume of 1. Somebody looks like sold 1 at 8 cents to the market maker. So nobody bought the other side of that. It was just the market maker took it. And I just got these 2 buys, 1 each, just to try and get my average down. I just want to get out. And so, we can see that stock price has been kind of flat. Premiums come down. And if we look at the spikes in volume, they correspond with a maximum of $9,000 in premium. So, it's just not a lot of money. And that makes me a little bit anxious with this because, there's just not a lot of people to want to buy the shares I want to sell. So that's kind of an issue. I'm an idiot. What I was just saying that 8, I don't know why the 7 cent one wasn't filled because I was trying to sell. I was trying to buy. Nobody wanted to sell it to me for 7 cents. They wanted to sell it for 8 cents. But what we can see with these spikes in volume is we have seen kind of a stair step up in open interest. So that is good. It's just that there's not much money behind it. Total premium, like I said, spike of 9,000. So yeah, this one just, not worth the risk. I want to get out of it. It just, there's not enough data on it. And that's kind of, what I've been learning on these weekly videos following these contracts is I want to see money. I want to be following unusual whales, not just, retail, spend 9,000 on this little spike. So anyways, I don't need to vent about that. Coming over to the chart over here, we can see ChargePoint. Why did I pick $2.50? So I had drawn this line over here. It looked like a head and shoulders pattern, did break down, rejected from that, rejected again, got kind of a fake out, break down here. And so I was kind of hoping that we'd see this continuation higher following earnings, but we just got rejected, which I guess is not so surprising because I do have this red trend line drawn there. But what you can see is getting back up to this purple trend line that would be right around $2.50. So I think that's kind of why I picked that strike. But, I just don't think it's worth the risk. So I want to get out. I could be using the money elsewhere or just, not be spread so thin. So I'm not having to manage so many contracts, keep my eyes on all of them. But if we do come over here to look at the data, we can see, looking at the general ChargePoint contracts, we saw price on Friday kind of being flat, going up a little bit. The net call interest going up a little bit while net put interest went down. So overall, this was, green. So the volume was in favor of those calls. So more people going long. But, looking at the data here, there's a lot of gaps, just not that much trading going on with it. We did have this spike back here about a month ago, but that was, again, like I said, $9,000. So, really just nothing exciting with this contract. Accumulate shares, sure. But these contracts, no, I don't think it's going to be an exciting winner. So that's why, I just want to trim my way out of it and just, fully exit all those contracts at 12 cents. But if I can get my average down to, lower than 11 cents, 10 cents, let's say, then I'd adjust this to 11 cents. And GTFO, if you know what I mean. But yeah, let's go over to the next contract. It's going to be the GameStop $80 call expiring June 20th. And so this is one that, I had talked about having a stop loss at 20%, but then I just kind of recognized, well, if I got that stop loss, that would have been at 390. I might as well just take profits a little bit above 20%. And yeah, so that's what I did. I ended up selling, got 15 extra bucks out of that because I would have sold at 390. And so that was pretty nice. And then following that, we did dip to below 390. So I would have been pushed out of my position. And part of the reason why I wanted to get out is because, well, it doesn't look like there were orders being filled at 390. I saw on my Webull app that I use for trading that premium was around 390, even though the sells or the trades were not happening any lower than 398. It just made me think, well, 390 is probably going to be hit, so I'll just take a little bit extra money. I could have made some more when it had spiked up to like 450. But I didn't exit then, and I still do have one contract at 325. Plan on trimming out of that at 100%. So I'm kind of breaking my rule here, not doing the 80%, just because, I feel like GameStop could really be taken off with, all the stuff going on with Roaring Kitty. And so 650, so I think it'll be nice to turn 325 into 325 times 2. But if price does go lower, we can see that, I would be interested to get another contract at $3, which is the last time I bought, was at $3 here, initially at $3.50. But yeah, I don't necessarily expect that to be hit, just kind of have it there to keep an eye on it. But what we can see with the volume, he's got these two spikes here. With that first spike, we saw an increase in open interest. That second spike was a sell off, but generally we've seen an increase in that open interest. So I think that's good. The premium traded on those days, over 100,000. So it's a pretty good amount of money, but it's not, eye-opening or anything like that. But yeah, let's look over at the chart to see what that's looking like. And, really, I should say, why did I pick $80? And so $80, I'm sure that we're all aware that GameStop was trading in the pre-market above $80 a share on May 14th. And so, I think that that's a pretty reasonable price target as we have been inching our way up along this orange uptrend. I suspect we could be breaking out, potentially getting up to 50 or so, where there's this gap here. Once we fill that, maybe getting up to 80, maybe getting up into the triple digits. So, I think that this could be a pretty nice swing. And, again, it's to not fall in love. I got my shares for being in love with them, but for swinging this contract, I'm going to let that limit order get filled. Then let's go over to, unusual whales. We can see all the GameStop data from Friday. And so what we can see is that, as the stock price in yellow went up, consolidated, kind of looks like a little bull flag there. So, that's nice. We can see that there was a dip in the call premium, the net call premium, but then it spiked up to be positive, but then came back down to be negative. It looks like the net put premium being positive, but yeah, it's Yes, this is where I need to get better at interpreting this data because we have the volume here that seems like it's more in the favor of the calls, but it looks like, let's see up here, this seems like it was much more aggressive, negative 1 million contracts. So that seems like there was net selling of calls. But, we see this volume here. So that doesn't look so great. But, it is what it is. And then just the data over here, we can see these spikes that I was talking about. This one going up to 145,000, this one going up to 105,000. And then if we scroll down, we can see actually, well, what days were those on? This was on November 25th. So if I scroll down, we can see November 25th here, 145,000, and we saw an increase in open interest the following day, and that open interest went from about 156 to about just under 500, but then it's kind of gone up to 500, then come back down, and now we're looking at it around 360. So, maybe that's not looking so great, but I think that we're going to be seeing some nice moves with GameStop in the next month, if not weeks, or maybe 2 months. So I think that the June 20th expiration is pretty nice, for swinging, not for diamond handing these contracts, because like I said, they're probably all going to go to zero. And then so the next one on the list is going to be Hycroft Mining, ticker symbol HYMC. This is the $3 call expiring in May. And so this is a very similar one to the ChargePoint contract, just that, I don't see there's enough money behind it, not enough data, not enough volume traded on it. As you can see these gaps here, with zeros for the volume over here. And so, I just kind of want to get out of my position at, less than 10%. I'm actually going to copy that less than 10% and paste it over. Actually, no, because I think, with rounding and whatnot, a ChargePoint, that's, if I do the math, it'd be from 11 cents to 12 cents. That's going to be 10% versus 13 would be closer to 20. Anyways, so here, yeah, less than 10%. So I got my average at 47 cents, which I've accumulated a lot of these contracts, as you can see over time. I guess I bought the first one at 75 cents, and I have been trying to buy the dips, 20 cents a low here, 20 cents a low here, and that wasn't getting filled. I had limit orders to get filled, and they weren't. And so, I'm just trying to get a little bit more aggressive with the two buys, one at 25 cents, another at 30 cents, just to get my average down in GTFO. Because, May is less than, 5 months away. So I don't want to be holding this to zero, because I think I have, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 contracts. So that's, $470. So that's a good amount to risk, and I just don't think it's worth it with the amount of data here. Excuse me. So I want to get out of it. But I'm just going to be waiting, not getting my average down. So that's why I want to get my average down to GTFO. But we can just see the stock price has been, fading down. The premium has been fading down, as well as my position, trying to get my average down. And what we can see in the spikes in volume, they correspond with a maximum of about, $4,000 in premium. So it's really not that much. So, 4,000, it's nothing. It's not a whale. So, there's just not enough behind it. But with these spikes, we can see that overall, we have seen a general increase in the open interest. So I do think that is good, but, there's just not that much money behind it. So I feel like it's a little bit risky. We do go over to the chart. We can see that it has really been struggling to get above this downtrend. And so, I could actually just draw a parallel here. It does look like it's been trading in a kind of a parallel channel there. And so I'm hoping that this ends up being, whether it's a parallel channel, falling wedge type of thing, I hope that it's able to break out. But so far, it really hasn't been able to. But maybe that's something that we see. This starts to go higher, and then I run. But yeah, why did I pick $3? Let's see. That's an important thing to talk about. $3. Let's see. The high over here was $2.94. That was hit on, let's see, what day was that? October 22nd. So, it's right around $3. So I could see price feasibly getting up there in the next few months. And, in that time, I will be getting out of my position because I don't want to be losing $500 on this contract. But if we do go look over at the contract and generally the Hycroft contracts from Friday, We can see that as price came down, consolidated, we saw generally the net call premium was pretty flat, nothing going on with that, but it was also flat and negative, while the net put premium was a little bit negative here, but then popped up to be positive. And so we see the majority of that volume being traded as puts, which, initially here, that's with it being negative, those puts are being sold, that's bullish, but then it switched to being, excuse me, it switched to being positive. So, yeah, and then just seeing the premium coming down here over the past 30 days. Spikes in volume were at most $4,000, like I had just talked about. So, yeah, I mean, I don't think that this one's worth it. And, excuse me. And so now I'm just going to come back to the table over here to look at the Intel call. This is a $30 call expiring again at June 20th, 2025. I do have, it looks like, 3 contracts here, and I do plan to add another one to my holdings at 60 cents if it is filled. The low on Friday was 62 cents, with it being 63 cents on Thursday, low of 62 cents on Monday and Tuesday of last week, with the New Year's Day holiday on Wednesday. And so maybe that gets filled, maybe it doesn't. But what we can see is these stock prices come down a little bit along with that premium. And, I was fortunate to be pretty patient to establish a position here, kind of at the lows here. I was seeing a lot of posts about it up here. I wasn't able to get involved then, and I was glad to not. I'm actually just going to clear my throat here. Sorry, I think I just need to be hydrating. I don't know, it's a long day. I've been at work 12 hours today, 12 and a half hours, so I'm kind of tired. But what we can see with this one, big spike in the volume here, which would correspond with an increase in that open interest, so that's good. And that spike in volume corresponded with $2 million in premium. And if we do scroll, just so I'm not only showing the data from unusual whales, this looks like it was from November 14th, so I can just scroll down here to see November 14th, we had a volume of just under 9,000 contracts traded. And then the following day, the open interest went up by about 7,500, going from about 25,000 up to around 32,000. So that was, majority of $2 million buy-in. So that is good. And yeah, and so let's see. Why am I picking the strike of $30? And let's see. So the $30 strike, that's because we got this gap up here at 28.87. That was the closing price on August 1st. And so, yeah, I mean, that's, why I got that strike of $30. And I feel like we could be seeing, price getting up higher. And if you do look at this, it does kind of look like an inverse head and shoulders. Maybe that's hopium, but I do think that we could be breaking out pretty soon. So that will be nice. And actually, I'm just going to look over at my data over here. So my average is 83 cents. It was a high on Friday of 71 cents, high earlier in the week of 76 cents. And, I'd just be trimming at, just approximately, I guess. It's not exactly 83 cents, or yeah, I guess maybe that's exactly, I don't know, I calculate this stuff, but 20% at $1, 80% gain at 150, and 100% at 167. But, hopefully I'll get one more contract, then that trim would actually be at 10%, though, really just to lower risk. But, 10% gains, over the course of the span of a few weeks, that's pretty good. And then, yeah, so let's go over to the data here, looking at the $30 call for Intel, or just generally looking at the Intel contracts from Friday. We can see that, as the stock price kind of bounced up a little bit over the course of the day, we saw increases in that put premium, net put premium going over to like 1 million contracts traded. And, this is something that, I'm confused about. This strikes me as being very confusing. But I think, this is premium. Okay, this is premium. So net put premium, $1 million. But the volume, I guess, was more on the call sides. That would be more selling, I guess, because it's negative. Because the volume there is green. But yeah, so this is something that I'm still getting used to. But this just strikes me as, it's I feel like this is probably more bearish than bullish, but maybe I'm wrong. Maybe I'm interpreting that wrong. But, I think that could just be like panic selling and stuff too, because, with the lower volume here, we've seen a decrease in that premium. It's kind of flattened out. And so just coming back to the chart, like I said, you might think of this as, let's see, come down, consolidate. Maybe that's a bear flag, but what I see is a bounce here, consolidation, that inverse head and shoulders pattern, and that this could be breaking out very soon, perhaps next week. So I feel good about this one, even if people seem pretty bearish. And actually, one thing about Intel, I was listening to the All In podcast today at work because, I had nothing to do over the weekend at my job. And they were talking about, there might be a surprise with Intel in the new year. That's one of the, their predictions that they were making. And so, yeah, hopefully that's a good surprise. And this is taken off and I'm able to take some profits. But let's get back to the spreadsheet over here. And so the next one on here is going to be the Luminar, ticker symbol LAZR, $15 call expiring January 16th of 2026, so a year from now. And so I am intrigued by picking up one of these contracts at $1. But so far, it looks like the lowest we've seen the past few weeks is around 114. Really not that much volume traded on, so it's really not too exciting. And the low on Friday was $1.45. So this is really one, I'm just going to keep my eye on. Again, not much data, so all of this here, take it with a grain of salt. One thing, though, that did stand out to me, might stand out to you guys, is that it closed on Friday at $6.66. And so, I'm not necessarily superstitious or anything, but I do feel like that could be kind of like a bad omen, and, not because I think that, but because maybe some people think that. People see 666 and they think that's bad luck. And so maybe the recent run that we've seen going from, starting the week at 546 being sub $5, not at the closes, but around $5 a couple weeks ago, getting up to, 666. Maybe we're going to be seeing a topping signal or something, but maybe it keeps going, and so that just strikes me as being maybe I should be a little bit cautious. And so I actually have some shares of Luminar, and because of this bad omen type of sorry, my throat is struggling, but this underlying close for the stock price at 666, that's made me realize, well, I don't want to be accumulating as it's low relative to my average, with it at 666. I think that it might be pulling back to $6. And if it does pull back to $6, maybe that corresponds with this premium coming down to around $1. But if we look at the chart, let's see what's going on with it over here. The Luminar chart, see that if it was red, that would especially be very ominous. But so what we have here is, I have drawn this downtrend, and that seems to be pretty notable. It goes back to the low of April 11th of this year. Got some bounces here, did break below it, and we are now above that level as well as above this 1618 from this Fibonacci retracement there at 611. And so one thing that I was talking about in the recent video that I did on Luminar was that this gap was formed, and I was hoping that it would hold that gap, not fill it, and then just keep that momentum going. But it does look like it pulled back to fill that gap. Now there's no gap to the downside, so that's potentially good, but it did kind of lose that momentum. Did get a pretty big wick on Friday, having hit a high during the day of 705. So might be getting some rejections around 7. So I'm not really too surprised about that. So yeah, I could see it pulling back to, maybe retest this downtrend. So maybe I want to draw it up here. So this would be like a retest the scene of the crime. So coming from this high and then bouncing from around 6 or sub 6 and then going up like that. And so that's what I could see happening. And that's a pretty ugly arrow. I might just try to redraw that. And so like that. And that's an ugly arrow, but I can't do anything about it. I'm just going to make that line thick, and I'm going to make it purple because purple's a fun color. And so that's kind of, what I could see happening. And so on that pullback, not only nice to pick up some shares, get my average down, but also to consider maybe picking up that $15 call that expires next January. And so why did I pick $15? And that would be because we have this gap up here at $14.70. That was the closing price from November 15th. And that was, of course, prior to the 1 for 15 reverse split from November 21st. It's like crazy. Luminar was at $15 recently. No, it wasn't, but reverse split adjusted price, yeah, it was. And so that's, the reasonable target that I see. And if we do look over at the data, we can just see that there's not much there. It's pretty boring. And even over here, take it all with a grain of salt because there are just not that many Luminar contracts traded because of that reverse split. And, Luminar's just never really been that exciting for our options, in all honesty. But thinking about something a year from now, $15, yeah, I'd be interested in that. But what we can see is, the stock price went up, but then it kind of came down a little bit. And with that, we can see that the net call premium went up, but the net put premium went up more aggressively. And so we can see that over here, it does look like it was more in favor of the bulls, but then it kind of switched to the bears, with it being net red there and the net put premium being positive, being more positive, more buying of net put, of put premium, of puts, than of calls, or at least more money being put on the put side than the call side. And just very little data because of that reverse split. There's just not going to be much data on it. And Luminar's never really been that exciting for contracts, if you ask me. So, but like I said, a year out, maybe something interesting there. All right, and so the next contract that we're going to be looking at, actually multiple contracts for Marathon Digital, ticker symbol MARA. First one is the $35 call that expires in March on the 21st, so that's just less than a few months from now. And so this is one that I actually hold, and I am a little bit anxious about this one not doing so well, although it is nice. Bitcoin crypto has been, going up over the weekend. So I feel like I could be doing all right with this position. And there are some things that I have to say, I could have done better with accumulating, and also a level that I'm disappointed I did not get filled at, or I did not have an order placed at because I was trying to pace myself. And I didn't really do a good job of it. But I first started accumulating at, a strike, or sorry, not a strike, a fill of $2.69. So I got that 69 cents there. That's fun. And that was on the date of December 19th. I should have waited a day for the next fill. I didn't think it would get filled. It got filled at 186. And then the following day, on the 23rd, got filled at 169. I like that number. It's funny. I got my average down to 208. And it's like, excuse me. And then it's like, I'm just going to take a break. I'm going to cool off. I'll reassess the following week. And then so I got another one at 78 cents, one at 71 cents. And then rather than placing a limit buy at 69 or, getting it even lower than 69 cents, I put on the brakes. And, I think that was good for me to do that because, I had just kind of, I was too aggressive initially. But I, just needed to pace myself with it. But anyways, I got my average down to $1.55, and I was getting a little worried that, I might not be, this one might be a big loser. But then with kind of this spike in the price of the stock, a little bit on Thursday, definitely on Friday, as we can see here. And actually, all of last week, closed at 1964. So, that's a pretty nice move to the upside. So I'm feeling like with the high from Friday of 108, after it went up, the stock price went up. I feel like getting fills at 155 could be happening. And so I was planning on just exiting my position at, I believe, 160, just kind of, split the difference, I guess, a little bit above my break even. But then with Bitcoin and crypto rallying over the weekend, it's like, well, maybe this one could, net me some gains. And so rather than following what my table says, I'm just doing it in 10% increments because the expiration date is looming, just less than a few months away. And so, 155, 170, 86, 201, kind of odd, and 217 are the levels that I will be taking profits. But, if it does go up to 155 because of that expiration date looming, I just get a little bit anxious around I don't want this contract to go to zero because theta really starts to decay these contracts closer to expiration. So it's possible if it goes up to 155 and maybe closes at 160, it's like, yeah, I'll just sell the rest of them at 160. Maybe keep one to see what happens. But, I think that's, really how you end up losing money. Don't want to get greedy. And, I was too aggressive initially. And so I will go over it in the chart, why I should have been more aggressive over here. The chart does support that there was support here. I jumped the gun a little bit too much over here. But what we can see, just kind of want to go over some of this data, see these spikes in volumes here. We can see this first one is around 2 million. The second one is around 3.5 million. And with that, we see the open interest generally, going up. So that does make me think that there's still hope here. But, all these contracts, might be going to zero. So good to consider that. But because, I was a little too aggressive with this one and I was listening to an interview with Fred Thiel, the CEO of Marathon Digital. And that just gave me like a lot of confidence in not only Bitcoin, but also just the business and mining in general. It makes a lot of sense, especially with, a Bitcoin friendly administration coming into office in, just a couple weeks really. So, I just feel pretty confident in this. I just feel like March is a little too soon. And with the new year, I like to have at least 6 months between, the day that I start establishing a position and when it expires. So rather than considering, June, which would be, 3 months after March, March, April, May. Yep. They're the quarterly contracts. I could have done September, but I'm just thinking, well, I might as well just do a leap. So going into January 16th of 2026, this is Marathon Digital, Mara, $50 call. And so this is one I am interested in at around $3. The low on Friday was 270, but because price went up in the stock, that premium went up and it's probably on the higher side around 335. So I don't know that this would get filled. And I also don't know that I want to be exposing myself to more marathon in case, I end up being wrong about the March expiration. And if I am wrong about the March expiration, then this is one that I'll be tracking. And then I could, maybe roll my contracts over to here or just, pivot, whatever. But what we can see with this is, it looks like the same kind of data, but it's, I guess, just, yeah, two spikes there, but they're different. It's different data. So I'm just making sure I transfer the right data over. But this is, these volumes correspond with 1.5 million and about 3 million versus the one that expires in March, 2 million and 3.5 million. So this is a little bit less money on this one. But generally with those spikes, we see an increase in open interest. So that does look good. But let's look over at the chart so we can go over, why I picked the, let's see, this a $35 call for March and the $50 call for January. So I think we should see some nice levels that correspond with that. So 35, why did I pick 35? I guess we got to take a step back. we see the peak here from February 28th of 2024 was at 34.09, so right around 35 bucks. So that's why I picked that for March. But March is getting pretty close, so I'm a little anxious and I kind of want to get out of that position. If I take a step back, perhaps I need to look at it on the weekly time scale. We can see, I guess, the spike, the peak over here. I picked, why did I pick 50? 50 call. I would just think that, why not just go with 80? And so the reason for that, and I can actually just look this up here in the options table. Let's look at the January 16th expiration. The highest strike for that contract, and that's calls, as you can see up here, is $50. So that's the reason why I picked that strike. But I see that this peak here, that was the high from November 12th of 2021. That could be a level price could be getting to. But, if I want to, just simmer down a little bit, think more about that 50. The peak over here was around 57. It looks like the high from April 9th of 2021 was, let's see, 57.75. And so these spikes, these peaks corresponded with the initial peak in Bitcoin in April, followed by the secondary peak in Bitcoin in, in November. And this is actually, like Bitcoin didn't go up that much higher than the prior peak. So, this would be a nice way to make a little bit of extra money if we do see, another couple peaks this year, as this 2025 is the year after the halving, just like 2021 was. So we might be seeing some pretty bullish price action over the course of the year. So yeah, I feel good about that. And this being around 57, a little bit above 50. 50 does seem pretty reasonable. And so I think that, given that I'd have basically a year before it expires, I think that's worth risking around $300. It's just, do I have that on the side when it does come down to 3? So right now I do not have a buy order placed for this. I'm just looking at it. That's what the yellow means, keeping my eye on it. And so if I do just to look at the data over here for all of the Marathon digital contracts, we can see that, price went up on Friday in yellow there, along with net call premium, whereas net put premium went up a little bit, but then went down and became negative. And so it does seem like this seems pretty bullish, in my opinion, that this has flipped into the favor of the bulls. This discounted premium here. And so this one is for that $35 call that expires in March. But again, getting pretty risky. I don't like contracts that expire a few months because I'm still learning the contracts, and it's just a little risky for me. But I do feel like with this recent turn of events with Bitcoin and the new administration coming in, I think that could be making some nice gains with this contract. But also, maybe I'm wrong. Maybe something happens. And so good to consider. And then for the $50 call, we can see, because I do have the data. Both of them have millions of dollars traded on them. Premiums come down to around, $300 or lower, $3 or lower. And so, both of these contracts, I feel good about them, but I just feel a little bit more comfortable with the $50 call that expires in January of 2026 rather than a $35 call that expires in less than a few months from now. But let's get back over to the spreadsheets here. I've got 3 NEO contracts, the first one being the $10 call that expires in May of this year on the 16th. And the reason why I started to look at this one is because we saw this big spike in volume that corresponded with a spike in premium up to just about $1.6 million. So a good amount of money there, and that was corresponding with an increase in the open interest, so that did look good there. And so I actually started accumulating this contract. Looks like I have, 1, 2, 3, 4, 5, 6, 7, 8 of them. I do have these limit orders placed to trim out of my position as it goes higher. But maybe I'm wrong with it, so that's something that I need to really consider, because May is less than 6 months from now. So maybe I'm wrong, and this is really just based on the idea that China will be releasing some more stimulus, and NEO could be rallying again, just like it was over here. And so that is what I would be looking for. But again, don't want to be too aggressive. And so that's partly why my limit buy order is lower than any of the lows we've seen the past week. And so maybe that gets filled, maybe it doesn't. Either way, I'm fine with it. And then if I look over at the other NEO contract, this is like the OG NEO contract, the one that I was like really excited about for doing this these videos, and that's the $8 call that expires in June. And so the reason why I was excited about it is because we had this big spike in volume that corresponded with yeah, it's $250,000, so it's not actually that exciting. But following that, we did see, gradual increase in the open interest, so that does look good. And so this one, I have to say, maybe I'm in over my head. I've got a lot of these, so I'm hoping for, I think this would actually technically be a 10-bagger because a 100% gain is a 2x, so I think a 900% gain would be a 10x or a 10-bagger. But I just have it going up to 1,000% because, why not? And so I think I have just the limit cells placed up to here once it gets into the $3 where I have to go by 5-cent increments. I didn't set those just because maybe I want to exit down here. Who knows? But yeah, I've got a lot of these, and my average, I guess I should have mentioned this for the other contract, my average for this one is 50 cents. My average for the $10 strike for May is 26 cents, so not too far off from the highs from the past week. But then looking at the $8 strike, 50 cents, again, the highs are pretty close to that. And it does look like I trimmed multiple times at break even, but I've done that enough times. And I actually think that I have a number of maybe 3 or 4 to be sold at just above break even, just to lower that risk. And then, hopefully, I'll be making hundreds, if not thousands of dollars with this one. But, maybe not. I need to be managing my risk, and, maybe I am early with these NEO calls and stuff. But again, similar to the $10 call, I do have a limit buy order that's lower than the lows that we saw last week. So maybe it gets filled, maybe it doesn't. And so one thing that I was thinking about, just being excited about maybe 2025, is the resurgence of the Chinese stocks. I realized, well, maybe I'm too early with these. Maybe I'm wrong. All this stuff. I guess what's the difference between being too early and being wrong? And so I realized, well, hey, I should look at a call that expires in January of 2026, and I'm looking at the $15 call, and I actually do have a buy order placed for this one, again, like the other contracts, just below the lows from last week. So if I could get one contract at 40 cents, maybe I could accumulate some more over the span of the year. But yeah, I feel pretty good about this, and I will go over in the chart, why the 8, 10, and $15 strikes make sense to me. But first, I wanted to mention the volume on this. We see these spikes correspond with, up to a maximum of about $500,000 or $500,000. So pretty notable there, with the other spikes being, more than $250,000. So looking good there. And for the most part, actually, yeah, even this one did go up a little bit, but then did pull back some. But we have generally seen an increase in open interest. So I think that's good. And also, on Friday, we did see this spike in volume. So I wonder if there's going to be another step up in the open interest. And, I feel like there probably will be. And let's see if we also see, we don't see that in the other NEO contracts. This one, the $10 call that expires in May, we do see a little bit of a jump in the volume on Friday. Not so much on the one that $8 call expiring in June, but definitely nice spike in volume on Friday for the $15 call that expires in January. But, let's look over at the chart. just to kind of get an idea of why I picked those levels. And so, I talked about it in a number of the NEO videos that I've gone over, why I think, and this is the weekly chart, I'm going to switch over to the daily, why I think $8 is a reasonable target. And so we kind of nearly got to it, nearly got to $8 a share on, it looks like September 30th, when we hit a high of $7.71 before getting rejected. So, I think that we could be getting back up to that level between, now and May, June, definitely 2026. But if you do notice, maybe it stands out to you, maybe not, because I got so many lines up here, but this thick purple line potentially looks like we could be seeing an inverse head and shoulders pattern. So I actually think that getting rejected there was pretty nice, because if we get back up to there, maybe find some resistance around 650, but then if we can break out, get up to around 8, that's why I've got that level. Y10, we can see that the armpit over here from that inverse head and shoulders pattern that has not formed yet, but maybe it is. It does look pretty nice in my opinion. It looks like it will be forming. We have the pivot high here. It looks like it's $9.57, so right around $10. And then 15, why would I pick that? We see the pivot high over here from, it looks like, the beginning of August of 2023, that being, let's see, a high. So August 4th, the high was $16.18, so $15 for that contract does make sense to me there. And if we do take, a measurement from the low here, the base of the head, or the top of the inverse head, go up to the neckline, just do a straight line. And then if I, I'm just going to draw this, take a step back. If I just connect that midpoint of that measurement to where that neckline is, we could see price getting up to, if this measure and move does play out, to around $14. So again, right around $15 a share. And, another way to kind of get, actually, no, I'm not going to do that. I was going to do a Fibonacci extension, but, you get the gist with that measurement up to around 14 and the peak being here around 16, $15 does make sense for a longer term target. And then really, if maybe I want to switch over to the weekly, we could see, it looks like we just got this falling wedge that we kind of broken out of, or, faded out of over here. But yeah, this just looks like an inverse head and shoulders if we get up to that neckline and are able to break out. But, first we got to get up to the neckline, and then second, we got to break out above that neckline, confirm, and go higher. Yeah, so, I just think this looks good. And, you could even potentially think of this as being, left shoulder here, head here, because it does go lower than that right shoulder, or that left inverse shoulder over here. Maybe we're forming another shoulder that would come up to here. So, yeah, I just think that there are a number of things about this and this red line. If I switch the Y scale to the log scale, you see that downtrend in red there, and that, would be coming up to right around here, $7, the intersection with that purple trend line. Anyways, that was initially suggested by somebody, I believe on X, talking about this potentially being a target of $8 back here, but we did get rejected just a little bit lower. Anyways, I'm going to switch this back to linear so we can take a look at the data here in unusual whales. And so just looking at the NEO contracts in general, the net call input premium over here, we can see the stock price in yellow going up on Friday. We can also see that net call premium going up, while also the net put premium was going up as well, but more aggressively it was the net call premium. So that's why we see more bullish, more green volume, more call volume traded, and that's bullish because the net call premium is positive. If it was below this line, that would then be bearish because the net put premium would be up with the net call premium negative. We don't see that. We see the net call premium being positive. So this looks bullish to me. And so this data over here is from the $10 call that expires in May. See these big spikes in, $1.5 million, $1.2 million over here. So that would be, let's see, December 9th and 10th. And then that premium's kind of died down. Volumes died down. And so I think we could see a resurgence, this being a dip buy-in zone that we've seen over the past 2 or 3 weeks. Looking at the next contract, which is the $8 call, June 20th. We just have seen some spikes with this one over the past 30 days. Again, that's what I'm looking at over here. But nothing too crazy. This is kind of a not as exciting contract, but I'm all right with that as long as there is some volume for me to sell my contracts at some point, when I'm ready to do so. And then the $15 call that expires in January of 2026. We can see this big spike right here corresponding with a candle premium of $342,507. So, more than $250,000, but, not in the millions of dollars. But we do see, kind of move up in that average fill in that premium, and then it come down. So I think that this is, dip buy zone that we're in right now. So I'm excited about that. I must say, I'm really excited about the NEO calls, especially because this is, of these contracts, this is not this contract, the $8 call that expires in June. I am pretty heavy in this one. And so maybe I'd lose a lot of money on it. That would suck. But I think the most likely scenario, in my opinion, is I'm gonna make some money on this. I'm gonna get some tendies. So I'm excited about that. But anyways, coming back to the spreadsheet here, let's look at the next one. So I got 2 plug contracts. This one is the $3 call expiring in June. This is one that I have swung a number of times, taken break even profits going up to almost 100%. But in total, let's see, I made over $100, I believe, with this. Mental math, I'm not gonna. I'm in Excel, so maybe I can sum this up, and let's see, what is that? Yep, so I made just over $100. Looks like 102.93. So not so bad there, but since I did just get out of a position on Friday, and so the reason why I did that, got out of this position, is because I have more than 20 contracts. I think I forgot to mention that in my theses over here, that I want to end the week with less than or equal to 20 positions, not contracts, whether that's call contracts or shares. And so, I, was up in this one, and I just feel like, similar to ChargePoint and Hycroft Mining, there's just not a lot of money behind this. And so, I felt like, this is one that I should just close my position. So I think I have 23 positions, which does include my Tesla position, which is long-term, and, I'm well in the green with it. So maybe I could say 22, but still, either way, I'm above 20 positions. This is one I was just like, I got some shares, that's fine. I'm just going to get out a plug. And what we can see here is, I've, been trading this a little bit, and I could have made more money. So, I sold this with my average, which I previously had my average at 36 cents, but then I got out of it completely. And then I reestablished it Monday of last week. And then I sold at 43 cents, which was, I think 20%. Yeah, 20% gain, which is around $7. A little less than that with fees. I could have made more. I could have sold at 54, which would have been, I'm not sure exactly. But yeah, I could have made more money, but that's how it goes. So I'm not too worried about that. And so just going over some of the data here, what we can see is spikes in volume haven't really been that notable until, really just recently. We saw a big spike in volume on Friday, which corresponded with a premium of still, this is a big spike, but it's not even $35,000. So, like a YOLO, I believe I read this on Wall Street Bets that a YOLO should be at least $10,000. And, so this is like 3.5 degens on Wall Street Bet YOLOing on this. So it's really, nothing too notable. It could just be one YOLO. So, it doesn't really stand out to me that much. But what we can see is with these spikes in volume, we have seen gradual increases in the open interest. So that does reassure me a little bit. But, since I did exit this on Friday, it's like, well, it's the new year. I don't want to be reestablishing or establishing positions that expire less than 6 months from now. And so with this expiration being less than 6 months from now, I did not want to do this one. And instead, I decided to look up the plug contract that expires in January 16th of 2026. And this is the $5 call versus the $3 call. So I'll go over why I picked $5. Let's see. I'll just go over, what I'm thinking. So I don't have a limit buy place for this one, but I am eyeing 40 cents. It was, the low was actually 36 cents in premium last week. But 40 cents, just to pick up one, and you have a year before it expires. So I feel pretty good about that. But I just, I want to trim my number of positions down to 20. At least just maybe feel a little bit better with some of the ones that I'm a little heavier in, so I have some more money on the side. But yeah, I'd consider establishing a small position, 40 cents. That'd be $40 per contract, and I just do one at a time. And so what we can see here in the charts, we can see that these spikes in volume correspond with spikes of like 40,000, this one up to 70,000. So again, not even like 100,000. So that's, I think, really the main reason why I have this as yellow, as just watching, not green, which would be I have a limit order placed. Just there's not enough money behind it. There's not enough data. And with these spikes in volume here, we actually saw a drop. So this spike in volume was selling. This spike in volume was buying, trend generally going up, but it did come back down. So this was net selling. But we also have to consider the range. This is 47,900 up to 48,600. So it's a pretty tight range. So really, it's just been kind of flat as far as that open interest goes. Hasn't really, I guess I shouldn't say, the change here was from around 48,500 down to 48,200. So that was a decrease of about 300 contracts, which you can see right over here, 303. So those are two plug contracts that I'm interested in. Let's just go over to the chart so we can see why I think 3, why I think 5 for a year from now. And so just looking at this plug chart, I had kind of drawn this little doodle here as, well, I'd like to see it move up here, consolidate, form a bull flag, and then go higher. And it does, in fact, look like that's what we're seeing. I was feeling pretty not so great about the stock price trading below this trend line. Maybe it's a little bit arbitrary, but it's based on, it looks like the low from, September 6th, and then the pivot low from October 31st before we got this big move up and then break lower. And so, I was just not feeling so good that it was trading lower here. Still got some shares, but in all honesty, as it's been consolidating here, for managing risk and whatnot, I've been trimming the shares that I have. I'm no longer holding the calls, but I am long with those shares. And I think I'm going to be less aggressive with trimming those shares, especially if I'm considering getting into the $5 strike call that expires a year from now. But why did I pick $3? Why did I pick $5? So you can see it here. We got this gap at 292. That was the closing price on July 18th. And so that is why I picked 3 for that contract expiring in June. But just with it being the new year and that expiration approaching, I thought I'd look further into the future and maybe go a little bit higher with the strike. And so it looks like the high on May 14th when, AMC, GameStop were squeezing up. Plug also had a pretty big move up, hit a high during market hours of $4.90, being just under $5. So that's why I picked the $5 strike. I think that we could be heading up that way. And, even beyond that, we got this gap here at 593, which looks like it was the closing price on November 9th of 2023. And so, maybe Plug could be going well past $5 a share. But, I just think that that's a pretty reasonable strike for 2026. And if I do just look over at this, and getting one of those contracts, only 40 cents, so it's or $40 per contract, because 40 cents times 100. But yeah, it seems pretty reasonable to me. But then, yeah, let's look at the data. And so let's see, just looking at the general plug contract data, we can see that, stock price was going up pretty nicely in yellow on Friday. And with that net call premium jumping up and then consistently or steadily going up over the course of the day, while put premium was a little bit positive here, but generally went negative and trended down. And so the volume over the course of the day was in the favor of the bulls because it was green here for calls. The majority of the premium or the majority of the volume traded was calls. And if we look, the net call premium was positive, so it's increasing. People are buying calls. And so that's going up, whereas the put's going down. So generally this looks good. So, I sold into strength. I could have made more money, but that's always the case. And, given it's a small position, it's not a big difference. Getting practice, managing emotions, in and out trades, executing them, and whatnot. And so anyways, looking at these past 30 days with the $3 call here, expiring in June, see the premium spiked up a little bit, kind of consolidated. I think we could be seeing a breakout move higher. And the candle premium from, it looks like Friday was $33,000. We can see that right down here. And it does look like the open interest has been increasing by about 400 between Thursday and Friday. We'll see if it's still around 3,000 or, with a volume of around 748 on Friday. We'll see if this is maybe 3,500 prior to the start of trading on Monday, because these numbers do get updated just before market open. But if we look at the other contract, that $5 call expiring in January of 2026, we can see that the spikes in volume here correspond with the candle premium of around 72,000. So, it's not that much money, but we do see increase in premium, kind of consolidation, and I think that we will be seeing these break out. So I feel like it looks pretty good. But then if we come back to here, the next ticker that I'll be going over, this is QuantumScape, ticker symbol QS, the $10 call expiring June 20th. And so this is one I trimmed on Friday, really just based on, kind of my strategy. I guess I'm not really sure why I trimmed at 10% here. I think it seemed like it might be pulling back. I don't know why exactly. But yeah, and then I bought back lower than what I sold. So, I had my average at 58 cents, and then I sold at 62 cents for like a $4.38 profit. And then the next day I bought back at 50 cents. So I got my average down from 58 to 54 cents. And then I sold for $11 profit, 20% gain on Friday. And I was going to try and get, I think I had a limit sell. I think I had this limit sell at 70 cents. Just 5 cents more. It was not filled. The high was 65 cents. And, that was me getting filled. So that's pretty nice. And the reason why I have it at 30 cents is, generally I'm bullish on QuantumScape. It looks great, but I just can't be managing all these contracts. And so what I decided is, I'll limit sell this one at 70 cents, make, that's going to be $15, $16 or something. $16, yeah, mental math there, not too hard. But I'm actually going to start establishing a small share position, which, the way that I do that is very passive, very slow, very boring. But then, there's no emotion in it. I can very easily buy dips and accumulate. And so that's not to necessarily swing for a lot of money, but just to, participate in the upside without having the exposure to expirations and that kind of risk. But just, looking at the data here, what we can see is that we've seen these spikes in volume that correspond with spike as high as 140,000. So that's pretty good, but it's not like 250,000. So it's getting there, but not quite there. But with these spikes, we generally see an increase in the open interest, although we did see kind of a pullback over here. But yeah, generally it does look pretty good, like it is going up. And then if we look at the chart, why did I pick a $10 strike? So let's consider that. And so, over here, I have to say a lot of this, this downtrend, I believe this is pointed out by, I'm just going to pull it up here. I believe I was retweeting the Bronx Viking, and he was pointing out this downtrend. It looked like we were breaking out. And the thing that's really nice about this is, we, let's see, we, have this downtrend based on, I didn't connect it here, but just, generally kind of an approximate line, get rejected from it. And then here, get rejected from it with a wick above, but pull back. And then here we break through and then pull back and retest effectively before going higher. So this looks like, we could be seeing a nice little breakout. And so I do plan on getting a couple shares, very, like I said, very boring, very nothing too major at $6. And if it does pull back, then I could add more. And if it doesn't, I'll just chill and, just happy to hold a little bit of this because I think there's a lot of great upside potential. And the reason why I pick 10 is, the high over here, that pivot high is 952, which was the high from July 17th of this past year. And then we also have this other pivot high, which was 1003 that was hit on January 4th of 2024. So exactly a year ago from today as I record this on the 4th of 2025. So yeah, that's why I picked those strikes. But between now and June, maybe that's a little risky, but I don't have any other QuantumScape contracts that I'm looking at. So let's just look over at this one and generally just looking at the data here in the chart for, all of QuantumScape contracts. We can see that the share price in yellow went up on Friday. And with that, we see the net call premium not only going up, but being positive, whereas the net put premium was more or less flat and then tapered into the negative. And so overall, this is bullish volume because it's majority calls that are going up in premiums. That means they're being accumulated. They're being bought, so that is good. And then just looking at the contract over here, we see these spikes here, but the candle premium, it's not that notable, but that's, because we're dealing with a stock that's, sub $10 a share. So, nothing too crazy on that, but I think that this one will be a good performer, whether that's contracts or shares. I personally just got to be managing the risk, not only not spread myself too thin with too many contracts, but I also need to make sure that I got cash on the side because, I'm not going to be making a lot of money if I have a bunch of small positions. If I consolidate that, have some larger, but fewer, quality over quantity positions, then I can really start to make some more money, rather 10, 20% gains, 80 to 100% gains. That's what I'm looking for. But yeah, I think that this one will be a winner. I just can't spread myself so thin. And then coming back to the data over here, looking at the RIVN $20 call. And so this one, got great delivery numbers as far as I understand. Wasn't paying too close attention, but I did see a lot of people tweeting about it. And so this is the RIVN $20 call that does expire in June of this year on the 20th. And so what we can see in the data is we see these spikes in volume correspond with this one being over $1 million. So that's looking pretty good. So feeling good about that. And then with that, we do see generally increase in open interest. We do see this other spike in volume, total premium that went up to over $500,000. It looks like, yeah, 570, almost $4,000. And we'll have to find out Monday pre-market if this up move in the volume corresponds with an up move in the open interest. I suspect it will because of, I haven't looked at the data on unusual whales, but we'll do that. And I think that will be kind of a highlight whether this is more bullish or more bearish. But I think that the premium will be going up just looking at this. But what we can see from my data is, I had 3 of these contracts, but I ended up selling one at 20%, could have made more money. this is incorrect. Oh, nope. Yeah, I could have made more money. That's how much money I made. I was like, that's like $2,500 per contract. No, 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 no. That is how much money I made, $25.20. And so I sold at 154. My average is and was 129. But just kind of following my rule book or whatever. But I could have made more than 50 bucks on that. I could have doubled this. But I just wanted to take the risk off the table, have some cash on the side, so that's nice. An additional $154 on the side. Now it looks like the high went up to like 232. So that looks pretty good. And so because I think that this just looks really bullish, I do have some RIVN shares. So not too concerned about being able to partake in further upside if these orders do get filled. But rather than doing 80 and 100, I decided to do 100. And so that would, be playing with house money at that point. And then, take 200% or, because of the 5-cent rounding above $3 with these contracts. I would then be trimming at or exiting at just under 200% gain. So, feeling really good about this. I think that I'm going to wish that I had more contracts, but, got to stay away from that greed, got to be taking that profit, stacking it, and whatnot. And so $20 strike. Why did I pick that? And I had previously been covering a $15 strike. Why did I pick that? Let's go over to the chart to discuss. And so here we can see the RIVN call, and I actually just put out a tweet about this. I'm not going to link it in the spreadsheet, but I was just looking at this. I was at work. I drew this. I had previously done this Fibonacci extension from, I think, shorter distance, maybe from here up to here, and it's like, I should adjust that. Just think bigger picture. So going from the low over here to this high and down, give an idea of where this might be going. And so I could see this going up to around $19 a share, not only that being the 100% extension, which if you want to know where that comes from, 100% move is this. And then so I'm just going to move that to the new low over here, and that brings you up to that 100% Fibonacci extension. And that also corresponds with the high over here of 1886 that was hit on July 12th of 2024. And, so I think the price could just go a little bit higher than that, and that'd be like $20 a share. So that's why I picked that strike. I'm not holding it to expiration. I'm not expecting it to be expiring in the money. I'm just expecting it to go towards being in the money. And with it being at 1649 as of close, going up over 24% on Friday, 24.45 to be precise. Nice big green candle closing above here. Hopefully we close above these levels. And so I had previously been, I actually had a limit buy at 13 cents, but I removed it on Thursday because my average is a little bit above 11 cents. Or $11. Sorry. I didn't want to then be just increasing my average if maybe this is breaking down. Of course, the day that I removed that, we test 13, could have gotten one more share. Then we break higher. And so now I actually have, I believe, a limit buy just for one share. Nothing too exciting, but at 1502, that being the 382 from this Fibonacci extension, I just feel like there could be a little bit of a pullback, kind of a retest before going higher. And I just wouldn't want to be so aggressive at 1549. I just don't want to be getting my average up too high, which I think I have like 14 shares, so nothing too crazy. Yeah, it's again not much of a risk, but I'm just trying to manage that, get on with the levels and whatnot. So I think that this could be pulling back to 1550 to around 15 before continuing higher, and I think that it'll be retesting the highs over here around 19. So I think that call, that $20 strike call, will be printing. But let's go over to the unusual whales data to get a look at that one. And so one of the things that really stood out to me about this one is, looking back in time, we can actually, see this in the chart that I have in the spreadsheet. Is this spike was over $1 million, which I had just mentioned to you guys. We see that reflected in the volume data here from Unusual Whales for that $20 call that expires in June. And so the thing I was, I guess, implying in the spreadsheet was that I was expecting or hoping to see green volume here in this general RIVN contract chart because, this implies that with stock price going up and in yellow and the net call premium going up in green, with net put premium being actually negative, so being sold, so that's actually bullish. We see that overall the net call over put premium was more on the call side, and those were being bought, so that is going long. And so that makes me think if we look at the spreadsheet, we are going to be seeing a jump in the open interest when we get the data for Monday. So yeah, I mean, this just seems really good. And so that's partly why, I don't want to be trimming out at 80% because let's see, 129. I'm just going to do some, I'll do it over here. Let's see, equals 1.29 times. It's a different font there. It looks kind of funny, but 1.29 times 1.8. That would be, around 232, just above, but 232 I would have had a limit. So that might have gotten filled and I'd have one less contract. So I want to be holding this for 100% and then 200% gains. And so I would then be making hundreds of dollars with this one. So I feel good about that. And I got shares in case it continues to go higher. But yeah, I don't think there's anything else I really wanted to add to this. So let's move on to the next one, which I'm super excited about this one. This is Unity Software, ticker symbol U, $42 call expiring in June. And this is one that, I picked up one contract, as is typical for me, one at a time at $1.27, which was the low on December 26th. So just above Ed's head there, you can see that date. And so, pretty proud to be scooping up shares there, the contract there. We haven't retested that level. The low on Monday of last week on the 30th was 128. So, I got a great discount. I got a very nice buy there. But, I'd like to have more of these contracts. I'm just really bullish on Unity. And I feel like, aside from anything related to Roaring Kitty, because I was making videos on Unity software, I'd recommend checking out that video from June 19th, before I saw anything from the Bronx Viking or the Wolf of My Street. I started following Unity software because it was requested in Ticker Request Live Sundays, 9 p.m. Eastern. It's a live stream that I do. I didn't reckon, like the chart looked like, I don't know exactly where the bottom is going to be, but it looks like this is a substantial bottom, which I'll show you in a second. But then I'm realizing, well, this is a deep value play. And, I'm not exposed enough. I do have some shares now, but, I should have gotten more of these contracts. I could have, exited for, a nice profit. But as you can see, maybe I'm being greedy with this. Maybe that's a bad decision. But I could see it going up to $42, perhaps by June, or at least getting up pretty close to that. And I think I could be taking some profits at 500. That's about a 300% gain. So I feel good about that, but I want more. But with it being the new year and June coming up, I'm actually looking for another contract that expires in January of 2026. So I'll go over that in a second. But for the data here, it's kind of limited. What we can see is, big spike in volume right when this contract was released. And I had actually been following a Unity software $30 call that expired in June, but I wanted something closer with a strike of 45. And so this just got released. And with it being released, a big spike in volume followed by an increase in open interest. And with those spikes in volume, they correspond with this more recent one. That's only about, let's see, it's not showing me, but that was a spike of about $55,000. This one over here was about 180. So That's almost it's almost $250,000, but not quite. So it's a good amount of money, but not as much as I personally would like to see, especially with the expiration looming. But I think it could be a great play. I think this will get filled, but I just don't want to be getting my average up. I was contemplating it, and that kind of made me realize, well, I should just look at another contract, but one that expires in January of 2026. And this is a $65 call. Why 65? I actually think it could be 75, but 65 is the max strike. And so I actually do have a buy order placed for this one at $1. It did hit lower than that last week on Monday and Tuesday. So December 30th and 31st hit a low of 93 and 90 cents. But I wasn't watching this contract. And what we can see at the spikes in volume, they correspond with $200,000+. So pretty close to $250,000. But what we can see, and this is actually surprising, we actually see decreases in the open interest. So that's not looking so good. So I'm actually surprised by that. But I haven't really looked at this too critically because I just, put this table together, the tab of the spreadsheet together while I was at work today. But yeah, I mean, regardless of what open interest is doing, and these increase, this is from 22, almost 23,000 here. So we can see that that's in November. So it's going up to just about 23,000, just in front of Ed's face there, 22,923. And then it came down from there to around 20,000. So about 3,000 drop off. So that's not nothing. But yeah, I mean, I think it's in deep DFV zone, if you know what I mean. But anyways, let's look at the chart. Why am I thinking it could be getting up to $65? And why in the more near term am I thinking 42? And so if we go over to the chart, I've gone over this in the videos, this downtrending channel, this is going back to like 2022, multiple years ago, or I guess I can't really say that because this is May of 2022. Downtrending channel. I didn't know exactly where the bottom would be. Now I'm just like, I want to be on board this train. I don't want to be, whatever. I did predict some bottoms before, but I was too in and out. And so, I kind of want to have some shares to be in the long term, think about contracts longer term. And so why 42? And so if we look at this little U shape there, that looks to me like it could be the left shoulder of an inverse head and shoulders pattern, which we have not formed yet. And if we are to form that and get to the armpit, that would be getting to around 43.65, which is where I have that level drawn, just being kind of approximate. So $42, that makes sense. And that to me is, it's cheaper than the $30 calls. So that's why I picked up that one. And then I'm not sure, I think I do have it mapped out up here, but maybe I'm just going to take a step back and draw it out so you guys can see it a little bit better. And I'm just going to adjust this so we can see price going up to around 75. So going from the low here, just being approximate, up to that neckline, matching up that midpoint with that purple line, we see price at the top here right around $73. So that makes sense to me. That price could be getting up there because that's the measured move for this inverse head and shoulders to play out. However, you noticed I talked about the armpit over here. We haven't even formed it yet. And so I think that price could be going up to around 43, but then getting rejected. And, when it gets up to 43, it'd probably be pulling back to possibly like $25 a share. And so if that were to happen, if it gets up to 43, and if I haven't taken profits on if I do have a position the leap contract, the $65 strike, then I take profits at 40, at this neckline, thinking that we would be pulling back, and then there'd be some more dip buying opportunities, basically around current price right now. So yeah, I feel really good about this one. And also, I don't really know too much about the company, but it's like gaming software. They incorporate AI into the gaming and stuff. So I think I really don't understand it that well, but they were actually talking about this on the All In podcast as well about AI gaming. So games could be kind of, geared more towards your specific interests, stuff like that. So people who are maybe not even into gaming might be interested in this stuff because it kind of targets them based on their data. The AI is informed of, what people like. And so, yeah, I feel like this is a really great play with what we're seeing with AI, gaming, whatnot. Deep value is what I see here. And that was, at 14. 1390 is when it hit the low. I just wasn't in it then. But anyways, looking over at the data here, we can see the $42. Actually, before I get into the specifics, let's look at the general data here. And this actually looks like, we might be seeing some pullbacks because we do see, price came down in yellow. And also we did see net call premium coming down. But we also saw net put premium coming down. But it does look like overall, the majority of that premium was on the put side. And we do see that the net call premium going even lower, even more negative than the puts. So this is, less bearish because this is bullish because the net put premium is coming down, but the net call premium is coming down lower. So net, that is bearish. That's what we see there. And what we see in these spikes, these correspond with, 185,000, 150,000. So, it's getting pretty close to, $250,000, but not quite. And this is for the, $42 call expiring in June. If we look at the $65 call expiring in January, see the spikes of, 206,000. Let's see here, candle premium here of 212, so it might be smaller volume, so shorter candle, but the amount of premium, it's a higher price, and so that makes sense because if you do look at that yellow line, that premium, it has gone up between here and here, and so that's why there's lower volume but higher premium. Yes, we might be seeing a little bit of a pullback, maybe a retest of these levels. And actually, let's look at the chart, and so we could see that, maybe we do see a pullback like to fill this gap that would be coming down to around 22.43. So, I think I have for shares, again, a small fish. I think I have a buy order for another share at 23 and also 22. Thinking that 22 might not get filled, but with this gap here, 23 might be. Feeling good about Unity overall. I'm just excited about it. And then the final one on here is really just kind of a gauge for market volatility. This is the VIX, the volatility index, $25 call strike that expires in February 19th of this year. So this is not one that I plan on trading. I just kind of wanted to track the data because we did see a pretty nice spike in the underlying. It's for this. It's only calls, so the underlying is like that premium. You can't. It's always got an expiration. But to be honest, I don't trade the VIX. I just kind of look at it. I trade the UVIX, so I'll go over that chart in a second. But what we see with these spikes is we see spikes in volume corresponding with, millions of dollars. Even these smaller spikes, millions of dollars. We see that open interest gradually increasing, so that does seem to look pretty good for this. And if we do explore the chart, the VIX, we can see that, had this big move up here. This was August 5th. Date we'll always remember. I'll definitely always remember. And we just recently saw this spike, kind of pull back, a little bit of spikes, but nothing too crazy. And so one thing that I have been keeping an eye on is with the UVIX is I've kind of noticed these approximately 2-week cycles where there's a big move up followed by about 2 weeks of pullback. And then about 2 weeks of going up, 2 weeks of pullback, really just being kind of approximate. And so, we just recently had this big move up. I exited for about 10% profit. I think it could have made 20 or 30% with the UVIX. But, I didn't know that it would be getting up to this uptrend because we had kind of broken below it and kind of seemed like there's a little bit of a regime shift. So I could have made more money with that, but I was glad to take profits on a day that everything else in my portfolio was red. So that was nice. And so, for this, I'm thinking there might be about 5 more days of this cooling off. But, because we're getting close to perhaps the end of a red box, or maybe this red box was pretty minimal here, and then we had a smaller green one. But anyways, I have a limit buy order for just 10 shares, nothing crazy, at $2.99. Because this has served me well for just swinging on days when there's volatility. All of my shares or whatever calls are down on the day. I can take some profits on the UVIX, so I kind of like that. And so it's just 10 shares, and that's with the idea of accumulating, ideally to get about 100. And so if I have that at an average of like $3 or so, I could turn 300 into 330 or maybe 360, whatever it is. And then that gives me, that $300+ on the side, taking profits on days when the market does go down. So I kind of like the UVIX for that, but I feel like this has just been a really nice kind of like cycle marker of just, really just doing these kind of arbitrary green and red boxes. And so I think that over the course of the next week, we'll see, good dip buying opportunities before another spike, which, could correspond with the inauguration coming up in a couple weeks, or maybe we see a spike before the inauguration, and then the inauguration, we see things cool down. And then so I'm just going to pull up the data over here from Unusual Whales. And so this looks like, it's sell-off, so I think that I could get some discounted UVIX shares next week. With this data here, we see that the net put premium has been dominant. We see that the net call premium went down. It was negative, selling of calls, whereas the net buying of puts. So that's why we got the red volume here. And as you notice, there's no yellow line. That's because the VIX is really just like options. It's not shares. And then now what I'm going to do, now that I've gone through this full list, is I'm going to go back to this, and I am going to go over Grok's top 10 premium picks for this week. Excuse me. And so this was just going to be for Friday from January 3rd. I'll be going over, Grok's top 10 premium picks. So if I just go over here to Grok, I've already got it populated here for us. So I'm going to ask Grok, can you name the top 10 stocks that had the maximum amount of options premium traded on January 3rd? So let's see what Grok has to say. Got 25 web searches, 1 post on X, it looks like. So number 1 is Tesla, not too surprising there. Nvidia, again, not too surprising. And then following that, Apple, which I imagine is probably going short because it hasn't really been performing that well. I feel like there's been pretty notable pullback. Also have Palantir, great performers, but maybe there's some tops that we might be seeing. I'm not really sure. I haven't been following Palantir too close. I got left behind on it, in all honesty. AMD, Advanced Micro Devices, another one. And then we also have SoFi Technologies, another one that I got left behind on. We also have Amazon and MicroStrategy. Ooh, I bet that's bullish with Bitcoin going up and stuff. And then the note here, because there are only 8, please note this list is based on posts found on X and might not be exhaustive or include all stocks with high options premium for that specific date. And I'm just going to follow up with, what would number 9 and 10 be? What would number 9 and 10 be? And so let's see. The information available does not extend beyond the top 8 stocks listed for the highest options premium on January 3rd. Therefore, I'm just going to say no guesses. No, I cannot provide guesses or speculative information. So from this, we can see 2 posts, and this is actually 1 post. So invest with Matt. Today's highest options volume. And so this is volume, not premium. I went to MicroStrategy. The next one would be Cisco Systems, then Rigetti. And so if I go back to, where I was just at, I can also, are you sure? Seems clear it's Cisco and RGTI. Based on the sources I have, it's not explicitly clear that Cisco, Systems, and Rigetti would be numbers 9 and 10 for the highest options premium. On the posts from X mention them among stocks with unusual options activity, but do not rank them specifically in top 10 for the day. Therefore, without conclusive evidence, I cannot confirm this. I appreciate your honesty. You're welcome. If you have any more questions or need further assistance, feel free to ask. But I am just out of curiosity. Yes, this is 1 post. This is 2 posts, so maybe one of the posts. Highest options volume, and then highest options volume. Yeah, so, I would say that I will, for my sake, actually, no, I shouldn't add them. Maybe I will, because, I just went over it here. I just mentioned it to you guys that from this post from Invest with Matt, we can see that we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, and this is based on volume. 9, Cisco, and then 10 is Rigetti, and this is options volume. So good to note that. But anyways, with all of that being said, I'm going to come back to the spreadsheet and throw this up here. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this and weekly options, highly regarded options theses every Saturday. Thanks a lot for watching. Have a great weekend, you guys. Take care.